Let's get back to the new trade deal with Japan. There's Indonesia, and there's the Philippines as well. Joining us now is the Senior Counselor to Treasury Secretary. His name is Joe Lavorgna, and Joe joins us this morning. Big picture. What do we get out of these deals?
Oh, well, right now, Stu, thank you for having me. We're going to get annualized $300 billion in revenue from the tariffs. Even the CBO, in its scoring, which generally misses the mark, says we could get upwards of $3 trillion over the next 10 years. So the first part is we're getting a lot of revenues. The second is it's encouraging companies and countries and companies to come into the U.S. market to invest, a lot of foreign direct investment. And that was the genius of President Trump in this Japan deal, where there's a $550 billion innovation fund that will then fund U.S. investment. So it's a very pro-growth, very pro-U.S.
I want to get more on this. There's a $550 billion investment vehicle. It's Japanese money that's coming in, and it's President Trump who decides where that money will be spent. And when it's spent, when it's invested, America gets 90% of the profits. That's an extraordinary deal, isn't it?
People, people don't believe it when you say President Trump isn't a great negotiator. I mean, he's been doing it for decades. It is an excellent deal. But again, remember, the U.S. has a large trade deficit with Japan. We're one of their most important buyers of their products. And Japan, because they agreed to this innovation fund, if you will, is only getting a 15% tariff, as Secretary Besson highlighted. So it's really in both parties' interests, and the Japanese are very happy with it. And importantly, President Trump is happy with it, and it's a very good deal, the best deal for U.S. workers and U.S. businesses. So he's very proud of it, and for good reason.
Treasury Secretary Besson says he's going to meet with his Chinese counterparts. I believe it's in Stockholm in the next couple of days. He says those talks are, quote, and these are his words, in a good place. That sounds promising, doesn't it?
It does sound promising, and as Secretary Besson's highlighted, that eventually these deals are going to come through, and there'll be a rush to get them done. And you highlighted, Stu, right before I came on, all the countries that have agreed to deals just this week. So everything is moving as President Trump wants, and as Secretary Besson had foreshadowed.
Is there a rush to get a deal done before the August 1st deadline? Seems like that's really putting a pressure on a lot of people.
Well, the Secretary Besson mentioned for other countries, that could be a hard deadline, and therefore the tariffs would boomerang back to April 2nd. So we'll see what happens there. But certainly, as he said on China, they're in a good place, and hopefully we'll get more positive news soon.
I want to change the subject and talk about the Federal Reserve. Look at this. It's in the Wall Street Journal. The Journal does not like the idea of taking power to court over the Fed's expensive renovation project. Do you think we should be filing criminal charges against Powell?
The administration has been very clear on trying to get out waste, abuse, and fraud through the federal system. And therefore, if there are major cost overruns in any particular project as it relates to the federal government's due, then certainly the administration should look at it, as OMB Director Russ Vought had highlighted. So let's see where that goes, but I think it's important to try to figure out ways that we could save money, and then we'll see what happens with this audit or this investigation.
I want to talk about all the money that's pouring in with all these deals that the president is doing. Does this imply a big jump in capital expenditures, CapEx spending, in the immediate future?
Yes, I'm actually happy you mentioned that, Stu, because one of the things we've recently observed is that overlooked data already show there is a CapEx comeback, meaning companies are spending on capital. They're buying industrial equipment, transit equipment, machinery, information processing and equipment. That'd be computers, software, things of that sort. And what we've seen in the official data is a 24% jump in the first quarter, and data from the Fed suggests we're going to see an 11% increase in Q2, which would put us on track for a first-half increase in CapEx of 17%, which, just to put that in context, would be the biggest two-quarter increase, excluding the pandemic, going all the way back to 1997. And this CapEx comeback, which will fuel productivity and further gains in blue-collar wages, is the direct result of the One Big Beautiful Bill, which reintroduced 100% expensing for CapEx. Yeah. And this is key. It dates back to Inauguration Day. So companies, in anticipation of that bill getting done, and it got done as the president wanted on July 4th, started their capital expenditure early. early. Now that the law is permanent, we're going to get more CapEx going forward that will broaden and lengthen a boom that will ultimately benefit U.S. families and workers.
All right, 3% growth by the end of the year, maybe. Joe Lavorgna, thanks very much for being with us.
Thank you, Stu, for having me.
All good stuff. We appreciate it. Thank you.